The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Folks, this is going to be my last show for a few days. I have run out of gas. I literally, my mind is pretty much shut down. I'm going to give you what I'm looking at today, but frankly, it's just been yesterday was tough on me because I missed so many things and didn't make any errors, but I missed a whole lot of stuff, and then had a few phone calls that I'll talk about a little bit later. But anyway, I'll be back, as they always say, as Mr. Schwarzenegger says. All right, I wanted to walk over what happened yesterday, you folks. I talked to you about the standard deviations and how they work. This is what we were looking at coming in. You were looking at the second standard deviation. That's a bell-shaped curve, folks. When you get out into that 90% level, things happen, and this is how these option traders and these algorithmic traders work. That's why that bottom was so very, very important yesterday. I'm going to walk it through right now because I posted the DAX and the FTSE for you, but what's going on right now is what's really, really important. Here's the S&P. I put this on a 4-minute chart so we could read it a little better. Hold on one second. We'll get it up here so you can see it here. Hold on here. If you remember, I talked to you about the 382 retracement. You'll notice the low down there where that Gartley finishes at the green butterfly Gartley pattern. That was right at a 50% retracement, and then the market just absolutely took off, and it's been going. We should hit 3160. That's the 78% level. It's also the 1.618 expansion on this, but notice the pullback was 38%. That means that the market is extremely bullish. Well, we have this going on right now. Let's just take a quick look in real life. Yes, it's standard deviation for the mean. You're absolutely correct, Terry. That's what that means. Let's move over here and take a look at where we are in the market. Okay, where is that little puppy? I know I have it here. Okay, here's where we are. Let's get this up here so we can see it. All righty. This is my artificial intelligence program. You'll see that it made a bottom down there about 3 o'clock in the morning, double bottom around 4 o'clock in the morning, and then off to the races. And we should be topping here as we speak at 9:15. I don't know where we are, but that's the case. We're up 900 and some points in the Dow Jones. We're near the 78% level in the S&P. So that's why I look at this, because it may or may not work. We might go through this and it goes all the way up all day long. I mean, it could certainly do that. He's been doing it all along. So anyway, that's the main thing to say that what's looking out. Yes, that's the old Foresight tool that has been improved. Unfortunately, GFT Forex was bought out by Gain, and Gain didn't want to have anything to do with artificial intelligence, and that's probably part of their problem. The people there just wouldn't look at anything. But hey, it doesn't work all the time, but it works some of the time. Let me take a quick look at see what's happening here, because this is going to be very, very interesting to watch this unfold like this. We'll get this over here so we can take a quick look at it. The actual exact time of this is we're in the zone here, somewhere between here and exactly about 9:15. So watch this here. And the other thing that we'll look at 10 o'clock. If we're lower by 10 o'clock, this thing's going to go down all day. That would be a really high probability. So just keep that in mind. I'm just showing it to you for what it's worth. I'm showing you the numbers. I wanted to show one other thing that was really important last night. This is with that S&P, because I put a video out on this, and I warned people that this probably could happen. This is the let's get this up here so we can see this darn thing. Hold on just a minute here. All right, you'll see here that we're almost at the 78% level. We're at 71. We're at 31.48. But that black line there, That black line was a 61% last night, and it backed off. It backed off about 20 points down to 30.80 and then took off again. Look at the red line, folks. This is what I was talking to you about yesterday. That was the 382 retracement, and then we went down and made the second standard deviation down there at 29.20. Once we went above, I mentioned yesterday, if we ever get above 3,000 in those futures, I said, well, I think they're going to go higher. They did. Who knows? Okay, what happened? All right. Yesterday, about 4 o'clock in the afternoon, I'm sitting there getting ready to watch one of my favorite shows, which is Nash Bridges. And lo and behold, I get a phone call, and I look at the automatic dialer, and it tells me that somebody that I worked with Lily, a friend, and we've known each other for 45 years. Let me see, 45 years. And all of a sudden, I was talking to him, and everything was going okay. But about 3 minutes into the conversation, I realized that he was not there. I mean, he was really out there in La La Land. He asked me where I lived about 6 times. He kept repeating his questions, and I thought he was joking with me at first. Now, I went along with it because, he's been a friend for a long time. But frankly, I was totally shocked. I don't know where his kids live anymore. He told me that his ex-wife was dating Kobe Bryant. Well, he wasn't even aware that Kobe Bryant died in February, and this really shook me up, folks, because we're nearly exactly the same age. We started at Lilly at roughly the same time. Our paths went a little differently because I retired in 75. He went on to work with them until 20 years ago. He retired in 2000. So I said, wow, what am I doing all this for? This is the one thing I can't go through, folks, is if my mind stopped working, this would really be bad. Some of you think it stopped working anyway, but that's what I'm looking at here. So I will take a few days off, and I think I'll be just fine. But frankly, that telephone call yesterday really set me back, because it's the second time it's happened in 2 weeks. Another very good friend had the same, not nearly as bad, but the same thing. He couldn't remember stuff like that. And one of the reasons when I do this show, it takes me about 1 hour to get ready, and then we do the talking here for an hour. So it takes a little bit of time, but today was a challenge, and so I will take a little bit of time off here. And one of the reasons why I'm doing it, folks, is this volatility that we're seeing is just absolutely unbelievable for the type of trading that I like, which is short-term swing trading, because it gives you some really good possible trades without risking very much. And that's the whole key of this, is not how much you risk. It's how much you don't risk. Well, my words are even slurring. Now you understand why I need some time off. The whole key to this is lose as little as possible. Remember Warren Buffett's 2 rules. Is rule number 1, don't lose money. Rule number 2, don't break rule number 1. So keep the losses as small as you can, but that's the main thing that you've got to remember here. We've got a break coming up. Don't have any guests today. I had one scheduled this week, and we'll catch him next week probably, but hopefully everything will be okay here in a little bit. We're trading at 3143 in the S&P. The Dow Jones here has had a high of 2560, and it started to roll over maybe just a little bit. Who knows?
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I see that Pedro from Park City put a little note in that Lilly is actually up 9% today. That is a very, very large move for a stock that it trades at that level. It doesn't move 9% very often. They might have something in the works with the virus or not, but heck, who knows? Everybody's talking about the virus. Don't know whether it means anything or not. I have posted 2 charts in the room here that someone asked a question about, and it's the British pound. The first chart shows the hourly chart that we're up against a 61% retracement. But the second chart, which is the weekly British pound, is the one that's very, very important. That chart is showing that there's a downtrend. You can see the 135 pattern there very, very clearly. We are in a downtrend, so if you wanted to sell the British pound, this is the best time to do it. You're sitting right at a 61% retracement in a downtrend, and it gives you a stop level above the 78% level. And then if you look at that weekly chart, if you break above that weekly chart at 0.5, folks, this would not be bearish. It would be very bullish. But right now, it's still acting bearish and is in the sell zone as near as I can tell. We just took a nice profit in the euro yesterday. Those of you that get the videos, you'll notice that we had that beautiful 3 drive to a bottom pattern down there at the 112 level. We've now exceeded 113 by quite a bit, and we need to get the euro above 114.50 in order for it to be bullish. I don't know whether it's going to be get there, but we'll have to see whether it will. I'm not actually sure. Regarding that 135 pattern, folks, I've talked about it many times, but frankly, I got the pattern from Bill Longstreet and his father Roy way back in 1986 in Pismo Beach, California. I'd met him in California. They came out to visit me, and they showed me this pattern that they used. And I said, wow. I said, look how the ratios lined up. And they didn't know what Fibonacci was. They thought it was a special pizza with anchovies. But it was interesting because once they saw that, they literally just they went wacko. They just couldn't believe that all these years they'd been looking at this and they didn't realize the symmetry that was there that validated what the pattern was. You don't see this pattern in any books or anything like that. As a matter of fact, what I did when I wrote my first book, Astro Cycles, A Trader's Viewpoint, I put that 135 pattern in there just to see if anybody would call me to say, hey, you talked about the 135 pattern, but there was really no description of it. And believe it or not, I had one call over the years about that. So makes you wonder sometimes about how people read or what they're reading. I don't know. We'll have to look at it. The one good thing about that book is that I did get some really good accolades on it, which was nice, and it was started my writing stuff. But I'm done writing books, boy. I'll tell you, that's a really hard thing to do, and we'll see. But anyway, anybody that's written a book already knows that. So let's move on to what else we're looking for. We talked about that British pound. What we need to do is remind ourselves, when we're talking about the pound, we really want to watch the dollar index. And this is the one that we need to pay close attention to, because if this dollar, let's get it up here, folks, then we'll chat. If we can get that dollar index above the 382, that's at that 97.50 level. If we get it above that, folks, this has changed the whole game in the dollar index. In other words, this big ABCD that completed down here at the 78% level at 95 is completed, and we're ready to go up. The 382 determines your trend, folks. As long as you're not above the 382, you're in the downtrend. You start getting above that, then you know that you're in an uptrend. That's what happened in the S&P yesterday. I tried to give you my best 2 cents worth on that yesterday, but as expected, I overpriced by 2 cents and didn't get any comments. But anyway, let's take a quick look at what the market's doing here, because I believe we've made a pretty good top in here. We've already coming down. Yes, this is already topped. Let's see. The key level, folks, is to watch 10:15 in an hour. Okay, if we're lower in 1 hour than where we are right now, we're going to go down the rest of the day, would be my guess. And it's a pretty good guess. That's really the whole thing that you're watching as you do this. Now, as we go through this, we're looking. Oh, here it is already. We've already did this in the crude oil. Let's just give me a second here, jump around here a little bit, because I'm trying to. Give me 1 second here. All right, let's get this up so we can see it. Just a minute. This will take a little bit longer. We'll look at crude so we can see what we're happening in the crude oil. You'll see it also topped up here. Now, that was right near the 78% level on the retracement level. So here again, we've got a situation that we could be headed down towards the for the rest of the day. This is not nearly, it's clear, but it's not nearly as clear as the Dow Jones one. The Dow Jones one and the S&P are the ones that are the most clear, but this is one that is certainly clear also. All right, let's move on, and we'll talk a little bit about that situation in the U.S. dollar. Very, very important, folks. The euro, we've sold off. We got up to 113.80. Let's bring this up. You'll see that beautiful pattern that we had here on the downside on that. This is where the ABCD patterns really come in handy. You'll see the big ABC 3 drive to a bottom pattern here, and I'll just describe it. You'll be able to see it. You're going to have to defy human nature here and do the work yourself. You'll notice here we had the 3 drive to a bottom here. Then we rallied Sunday night to 112.90. And I mentioned if we get above that 112.90, that's the 382 of that move. That tells you you're going to go higher. What did you do last night? You went right up to the 78% level. I mean, almost to the exact tick. It was the exact tick. Shut the front door and raise the rent. Let's get this up here so we can let you see it. But it was the exact retracement number. Geez, sometimes these numbers really work, boys and girls. Let's get up here and take a look. You'll see we hit the exact 78% level, and now we're at the moment of truth here at this 112.90 level. We got to hold this in the euro, otherwise the euro is going to break down. Remember, this is a longer-term chart. We are still heading down. I mean, all we've done here is had these big equal moves, all right? And we're completing those. And what we're doing now is I believe we're getting ready to head lower. You can see that the time period between February and March was equal to the time period in price from the time period between March and June. Those were equal swings. Now, you can't make that up. You know, and look at the numbers last night. I mean, gee, they line up pretty nicely. If you want to look at anything to trade the euro. That thing it trades about $1 trillion a day. You don't get tagged on, wide stop reversals or anything like that because there's so much out there. I mean, no one can make this market move, not even the Federal Reserve. They can move it for a little while, but they can't move it for a very long time. That's for sure. So remind ourselves that that's what we're doing. So we've got a chance here to chat just a little bit about this crude oil. This is very short term, folks, but this is the kind of thing that'll give you an edge if you're really watching it, okay? And that's what I'm doing, is really watching it. Okay, let me get this up here, and we'll just take a quick look here again at the crude oil, because this is showing you just what I talked about. You'll notice that, oops, we got a break. We'll be right back.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back. We have a question from one of our listeners about natural gas. Let's get this up here, and we'll walk through it here just a little bit. Here is the daily here on the natural gas. We're going to have to go through 2 steps to see where we are. You'll notice that dark black line there. That was 5 days ago. We hit that 78% level, just spot on at 167. We rallied all the way up to 183. And in the last, Thursday, Friday, Monday, Tuesday, look where we are. We're breaking down now. We're either going to make a double bottom here or it's lights out. And we're going to make new lows. That's my guess. The 2 reasons for that guess are, first, look at the wide-ranging bars the last several days. That's a lot of selling coming in, folks. There's no support there at all. Once we went below 168, that was telling you, trouble in River City. This is not good. Now, remember, I don't know diddly squat about the fundamentals, so you have to bear with me on that one. But let's just look at it from a technical basis and move it out, 1 degree. And if you'll take a look here, look what happens on the natural gas if we start to break down. You'll see that you have a really, really strong pattern down there, making new lows down at that at 141 and possibly 135. That's 30 cents. And believe me, natural gas can go that far. It moves very, very quickly. It's a great thing, a great trading vehicle, because it follows the stops losses really closely. The patterns are there, the swings are there. So we need to watch this closely. This could be a double bottom at the 160 level, but frankly, if I would have to use something else besides this to tell me it's going to be a double bottom right now, I would have to wait on this one. I don't want to stand in front of this freight train and think where the bottom might come in. It's just not worth it. Frankly, it really isn't. So I would just stand aside on this one, because it looks like we're heading down to make new lows. Well, we're only 2 cents away from the 159 level. So that's not a good one. And the way it's coming down quickly is a little scary. So I'd be really careful with the natural gas on this one. So let's take a look at that in a few days. We'll see if it does anything different or not. All right, let's get on to the next thing we want to talk about. Let's check the market just for a second here, see what's going on with the stuff, and we will take a quick look here. We're starting to break pretty good now in the stocks. We're down about 200 points now in the Dow. 66. Yeah, we're down 250 points since the high. Remember, folks, the key that you want to watch is at 10:15. If we're lower than at the 10:15 than we were at 9:15, that's telling you that you're going to go down the rest of the day with a probability. That's all it is. It's just a probability. Doesn't mean anything more than that. No less, no more. So those are the numbers. You got to remember that it's all probability based. When I posted that in the crude oil, I wanted to see how it reacted against the 382 level up there at 38.40. We got as high as 38.49, which means this crude oil is still moving to the downside. We're starting to accelerate now in the Dow Jones. We just dropped another 100 and some points in the last 4 or 5 minutes. So another reasoning why you want to be very, very careful here in the stock market for today. And it's up 900 points. I mean, you don't have to be a rocket science to think what's it going to be up, 1,800? Yeah, it could be. Hey, anything that went down 1,800 points can go up 1,800 points. Remember that. Very, very important. Let's just take a quick look at Lilly stock. I don't know if I still have it in here or not. I used to watch it all the time. I had some stock for Lilly for a while. I'm still in their retirement. No, I don't have it, so I'm not going to do too much with it or not. But someone's asked a question about the Apple. Apple has just been on fire. It's trading now like pork bellies. It used to trade $1 or $2, but now Apple is really, really starting to swing. So we need to keep an eye on it. Just a second here, and I'll get it up here. 1 second here. Oh, I've still got, I've got to set the refresh on this, folks. Let me show you why I'm laughing. This is one of the things, this is the chart of Apple using bar charts, which I really do like bar charts, but I do the, hold on a second. I do the candlesticks because they're easier to count. But let's get it up here again here to look at the Apple, because we've gone up and we've made a new high by quite a bit. We got up to 355. We're trading around 351 right now. So, that's been, well, all of them, all of those patterns that I looked at were showing bearish patterns. And I have to stick by it. Just give me 1 second and I'll show you the FANG stocks. We'll see if they've changed anything or not, but let's get them up here and we'll look at them one at a time, because we were showing some bearish patterns. We've just looked at the Apple. Here, we'll bring Amazon up here. You'll see here we have the same thing in Amazon. That it's also showing a very bearish pattern. And if we take a look here at Microsoft, it's had this big, well, it's acting better than the others, but let's just show you right here on the weekly chart. You had that hanging man setting there in Microsoft. And then take a look at, we looked at, here's Netflix. Netflix is the most bearish, in my opinion, if you wanted to sell something. We'll get this up here to take a look at it. You'll see here that we have an incredible pattern here in Netflix. You've got a 1.618 expansion. That's the head. You can see your left shoulder. The right shoulder is lower than the left shoulder. We have a Gartley pattern in between. A, B, C, D, Mother, God, and Country. I mean, my goodness, that's your stop has to be, well, let's see, it's trading around 431. Your stop would have to be around 451. So you got to risk $20, which on a 2%, it's roughly 3.5% of the contract. But this has got all the things. Now, I don't know if it's going to work or not. I'm just looking at numbers, but this is the pattern. Let's just bring this up here so you can see this beautiful pattern. This is it might not work, but this is one that you really like to see. And what you're doing now for the last couple of days, you see you came off pretty good, and you're not rallying back. It's weaker than the rest of them. So this is the one you want to watch if you're going to look at a FANG stock to sell. And another one that is possibly looking relatively tough is Google, but it doesn't look nearly as bearish. Let's just get this out of the way here. This isn't nearly as bearish as the. Well, I've lost contact here, boys and girls. Give me a second here. Here's the Google coming up here. It's not nearly as bearish as Netflix. Netflix is the most bearish of the FANG stocks. Facebook is next, but those are and Amazon would be in there third. And the strongest, of course, are Apple and Microsoft. But Apple's not a FANG stock. But between Apple and Microsoft, that's 22% of the NASDAQ. So we'll keep in mind here. All righty. Any other questions that we might have? 877-927-6648. And we'll be back with you in just a second. But I wanted to share with you the chart of the GDX, because I think we're getting ready to have a pretty good move here on the downside, but I'm not quite ready to do it yet. This is the miners. We'll get this up here so you can see it. And I'll talk about this miners index when we get back, and it will be an interesting one to look at for sure. So those are the things that we're looking at today. 877-927-6648, and we'll be right back.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we put a chart up of the GDX, the Gold Miners Index. As you can see, with that dark black line there, that is a 135 pattern. That is a bearish pattern. You know, you're trading in the direction of the trend. The short-term trend is down over the last several weeks. It's perfect if you want to defy human nature and do the work yourself. Go in and take a look at those ratios. You'll see that they'll line up perfectly. And when you see something like that, that gives you a spot to really say, aha, this is something that I can use, and maybe it works, maybe it doesn't, but it gives you the odds in your favor, and that's what you're looking at. So that tells you that you're heading down. We feel the same thing in the gold market, but right now we'll talk about gold in just a little bit here, but we've had a question here about the grains, and since we're talking about the grains, we might as well talk about the corn. Get it up here, and you can see here we've had a little bit of a rally here, but you talk about a dead cat bounce. This is the absolute definition of a dead cat bounce. We've had a rally from 310 to 332, a 22-cent rally in corn, which is really, thanks, Marshall. It's really, not very much. I think we're going to have probably some weather problems. Everything else in the world is going crazy, so why shouldn't we have weather problems this year? So we're watching for a really big range here. If you get a good range where the market pops out of it, it tells you it's got some interest, but there's just no interest in it right now because they have so much corn from last year, and now they got the crop going, and here we are. The corn is high as an elephant's eye on the 4th of July. I mean, we're not very far from the 4th of July. What, 3 weeks away? That's not very far. So your crop is pretty much, in the bin, at the end of the July. But if you get a lot of wet weather, or you get frost, then things could change. But it's going to take something really dramatic. In 2 years, or not 2 years, but a year from now, and believe me, folks, I am watching the grains very, very closely, especially soybean meal because it's all protein. We had a nice move off of that bottom there at the 190 level in the Christmas. Let's see if we can get this up for you folks here in the Christmas. In Christmas meal. Hopefully we can find it. Doesn't look like it wants to come up here very quickly, but just give me a second here. And there we are. I think, no, this is the one I want right here. Okay. Yeah, there we go. Get this up here. You'll see. I don't have the patterns in right now, but I can do one quick thing to show you basically where we are. We had a really nice move when it went down to 290 in that Christmas meal, and you'll see here that we rallied up to 302. We're backing off a little bit right now. If we can get it above that 304 level in the December meal, then we'll really have something going. But boy, that big bottom down there, 290. If we go below 290, that's going to be pretty bad. And a lot of this will be reflected in what's happening with the China, because China does buy a lot of our stuff. I know they're buying quite a bit of stuff out of the let's just time out here, from Brazil, but Brazil's having some problems too. But it's going to take a weather problem in order to get this thing, moving in the other direction. So let's keep that in mind. Very, very important for sure. I believe we just made the 78% level in the crude oil up there at that 38.90 level. See, did we get it? The high was 82. Yeah, you'd like to see it about 38.90, and we're 38.75 in the crude oil right now. So we'll see what's going on here. The Nasdaq is still going nuts. We're above the 78% level, I believe, in the Nasdaq. No, we're trading right at it. So we'll get this up here and take a quick look at it. And give me 1 second here. There's what we are. Yes, China owns Smithfield. It certainly does, but the way that it's operated and stuff, I still believe is run by the original people. Rich Anderson knows that better than anybody else, so we'll have Rich on. We'll ask him about that. But China is, when you're getting information out of China, folks, it's really, really difficult. Believe me, it's harder than you might think, and the reason is they don't always, want people to know, and they can do that. Well, our government's not. Well, let's get off the soapbox, Larry. Okay, let's move on to the next one that I think is not important, but it's still good enough to pay some attention to, and that is our Treasury Bond. If you'll notice here that that's not the right one, Larry. Hold on just a second here. 1 second, and we'll get it up here, hopefully, and then we'll ask some questions about the wheat market, and there we are here. Yeah, here we go. If we talked about this before, folks, these bonds, interest rates look like they're going to go higher, and I have to stick to it. I know everybody's talking about negative interest rates and things like that, but this is the bond market, and it doesn't want to. That last high we had just 3 days ago, we talked about that 178 level, exactly 61% from the high we made on the 15th of May. And now that sets up, if it's right, we take out the 170 level. We're trading at 175. We take out that 170 level. You're looking at 162. At 162, folks, when I started trading bonds, they were trading at 52. So 52 to 162, do the math. That's a big move. That's when interest rates were 13%. Whether interest rates will ever get back there or not, all I know is that negative interest rates don't make any sense at all. And anybody that tries to tell you that, you should run away from them, not walk away from them. It's just insane to think about that. It just doesn't really make a whole lot of difference. Look at the weekly chart here on the Treasury bonds. So going over the last, 5 years here we got in here? 6 years, from 2014. You got the big ABCD there. You got the ABCD from 2019. Why in the world do you think that interest rates, are going to go higher? I know the Fed is in there buying corporate bonds, and they're buying, junk bonds or whatever they're doing, and I know they can do it as long as they can, but there might be a point, and I'm just saying, we just made that number, folks, the 786 in the crude oil at 85. That number was, hit it. That can't be right. Well, 85 was a high. That was a 786. So we'll see if it means anything or not. But this bond market just is it's just acting different from what the Fed is telling you. And I don't know. You hear rumors, all these conspiracy stuff that the United States is going to tell, China to go take a flying leap off of short ledge because they're not going to pay the bonds back. Boy, if we did that, the U.S. dollar would go down so much you probably stop trading it because that'll be a real breakdown in that. And so I do not believe that they're going to do anything like that. You have to have reputable debt, and China doesn't own nearly as much as they used to. The big owners of the debt is the government, is the Federal Reserve themselves. So we'll have to remind ourselves of that. But anyway, the bonds do not look bullish. That's bottom line. If they get above 178, 3 points from where we are right now, I'll change my mind and say, yep, maybe they're going to go back and test that 185 level. But I do not believe they're going to go negative. It doesn't make any sense. It doesn't make any common sense, if that means anything at all. So those are just a few of the things that we're taking a look at. We're starting to weaken up a little bit here. You start to see the weakness coming into the stock. So the odds favor it be down for the rest of the day. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archived workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I wanted to run through that gold trade yesterday because if you remember, we were talking here, well, after it happened, but you'll notice there was a really strong support there in the August gold at 17.18. We bought it at 17.20. The market rallied, you can see, to 17.25. It got up to 17.27, and I sent out a special alert to put the stop as close to break even or at 17.18, whichever you wanted to do, because if it went back down, you'd be looking at something that would probably go a lot lower. And this is one of the another reasons why I was so darn frustrated yesterday is if you'll notice here, the market, if it broke that level, had a price target to make the 61% retracement at 1704. And as you can see here, we only got to 1706, and then we took off. So I missed that thing. It did not make the 61% retracement. So I was sitting there watching the market rally. And, of course, once it went above 1725, you could literally see that it certainly wanted to rally because you took out the high preceding the low bar, which is usually a sign the cycle has changed. And, of course, we got up to 1742. We're trading around 30 or something like that right now. I haven't even looked at it very closely. Now, the Dow's down 300 points from that 9:15 time that we looked at. If you were selling that there, you should have your stop at break even in the Dow Jones. If it works, it works. If it doesn't work, it doesn't work. But the market's swinging, 1,800 points down and 1,800 points up. If you don't use a stop in these market, folks, you might as well send your money directly in to the Chicago Mercantile Exchange because it'll save you the commission. I'll see you folks in a few days, God willing, and live every day in an attitude of gratitude, and may God bless.